Hi there everyone, it's Steve Quiones, Senior Mortgage Planner for Sterling Home Mortgage and your Loan Sherpa, helping you navigate through the highs and lows of the mortgage and real estate industry. I hope everybody had a great 2009 year. Happy New Year to everybody. 2009 was really faced with a lot of different things that really, I think, got everybody somewhat worried. There's a lot of unemployment. I can't tell you how many friends and colleagues and clients that have become unemployed. Lots of foreclosures. Foreclosures are still looking to happen, I think, until we start creating more jobs and people start feeling more secure about what's going on in the market. Then we'll start seeing some things kind of loosen up a little bit. Home prices, again, still come down. Some areas are starting to kind of get a little bit of strength, but for the most part, we've still seen that to be a little bit lower, a lot lower than where we were a couple of years ago. Interest rates, good news. Interest rates have been very low. I think I looked at a 15-year cash out refinance not too long ago and it was around 4.25. I would say in the last couple of weeks, though, it has definitely come up, and I'll be addressing what I think and where I think the rates are going to be in this upcoming year. And then lastly, still a great time to buy a house. That was 2009. We had the first-time home buyer credits. And a lot of people taking advantage of that, again, because of the foreclosures, the prices of homes and short sales were still very low. So that's all been very encouraging for those people that wanted to get out there and buy. And though I would say that sometimes it's been a little bit of a challenge to get through some of the banks that are holding these properties. But for those of you that have kind of held out and stayed true to what you were trying to accomplish, I think you've seen that it's been actually worth your while. So what does 2010 have for us? Well, I think it's going to definitely be better than 2009, way better than 2008. So that's the positive part. Some things that are going to change now, and we know with pretty good certainty, is we're going to see interest rates starting to creep up a little bit. Now, for those of you who've been in the market that have had interest rates in the 14%, that's not what I'm talking about. I would say probably by the second quarter, we'd probably be in the sixes. Potentially third, fourth quarter, we're probably looking at 6.5. I'd be surprised if we go much higher than that. It's just a gut feeling that I have. Again, nobody has the financial crystal ball that can tell them what exactly is going to happen, but it's just some feelings that I'm getting and what's going on in the market right now. One thing that's going to bring interest rates up is if the economy actually does rebound. I think once we start seeing a little bit more certainty, people start kind of loosening and start spending again. More discretionary income, that kind of thing. We're going to see more people going back to work, which is going to raise consumer confidence. The economy is going to turn around, and then we'll see rates follow suit. They will raise as well. The other thing you want to hear about, and if you're reading, just kind of keep, these are little bullet points that I want you to kind of pay attention to. If you hear anything about inflation going up, that is the arch nemesis of interest rates. So when you start hearing about inflation going up, what they're trying to do is kind of slow down spending, and as they do that, interest rates will rise as well. The Federal Reserve is another thing. For the last almost a year and a quarter, if you will, the Federal Reserve had pledged to spend $1.25 trillion on buying mortgage-backed securities. Well, we're nearing toward the end of that. I think it's going to end here in the next 2 or 3 months. Once that happens, it'll be interesting to see how mortgage banks and whatnot react to that, or the stock market for that matter. Again, that could be a really good reason for interest rates to go up. Again, that's that confidence thing. If there's no confidence that the Federal Reserve is going to bail us out yet again, and maybe they will, maybe they'll come up with some new policy that says, hey, we're going to go ahead and continue buying in an effort to keep interest rates low. That would make sense, but we'll kind of see what happens here in the next couple months. The other thing that will be coming to an end here, April 30th, that is the first-time homebuyer tax credit. That has allowed a lot of people to get into homes and receive a credit for doing so. To find out more about what the rules and regulations are, please check out my page on Facebook. It's Loan Sherpa, L-O-A-N space S-H-E-R-P-A. If you go into the Friends link on Facebook, type in Loan Sherpa, again, 2 words, and when you do that, it'll come up. You can join the page. You can become a fan of the page. And I invite you, actually, just probably a good segue to talk about it, I invite you to go in there, raise questions. We'll have discussions. A lot of your questions that you have, other people have, and so if people can log in there and learn about what's going on and some of the answers to those questions, I think it's going to help a lot of people. So this year I really want to make use of that page. Again, Loan Sherpa on Facebook. Anyway, for a first-time home buyer, you need to write a contract no later than April 30th in order to take advantage of the credit, and it has to close by June 30th. So please keep that in mind as well. Now, if interest rates do, and I think they will, go up, there's an interesting economics. This goes back to Econ 101, kind of supply and demand. Right now, what I've noticed is that if you can rent for a certain price and you can buy for a certain price, let's say that common denominator is $1,000. Well, if interest rates go up, that payment now puts that out of whack. So now it becomes cheaper to rent than it does to buy. In order to keep those homes moving, and especially with the first-time homebuyer tax credit not being around, I'm anticipating home prices to come down a little bit to keep that balance. So please I'm not saying don't buy. What I am saying is if interest rates if they do go up, it's not a reason not to buy, but you might see home prices go down. So just kind of keep that in mind. To give you an idea, I put some different scenarios together. If you had a $100,000 mortgage at 5%, let's say you bought it last year, your principal and interest on that loan would be about $546. At 6%, remember I said maybe second quarter, this next year we might see things in the sixes. At 6%, your principal and interest would be $610, a difference of about $64 a month. Again, not catastrophic, but still every dollar counts right now in today's economy and on our personal budgets. If you go up to a $200,000 loan, basically take those same numbers and multiply it by 2, and it's going to get you real close to what that would be. 300,000, multiply those original numbers by 3, and that'll get you about what the difference in payments would be. I'd like to just thank a couple of realtors that are just doing an outstanding job for their clients and just getting transactions closed. Number one, Cheryl Boyd of Russ Lyons Sotheby's, as well as Kathleen Procopo. These guys have either both been referring other realtors to me and or bringing deals that are basically falling out from other banks. It's not an easy environment like it used to be to get these things done. We're still getting loans done. However, it's taken some doing, and you really got to have some experience in this business. You can't just have jumped in the business and expect to close some of these transactions. There's so many guideline changes. A lot of banks are still tightening, and so it's taken some doing. There's a lot of planning that's going involved, and when these things blow up at title right before they're supposed to close, and I get a call, it's kind of a 911 call for a loan. They call the Loan Sherpa. We're able to get them done. Now, again, we're not getting everything done, but really, I would rather tell somebody up front, you know what, this is why this isn't going to happen, or this is why it is going to happen, or this is what we need to look out for. And if we can get past these little challenges that come up, then at least we know where we're at. I just hate surprises. It can be a stressful time when you're buying a home, but we really, really try to make it easier. These two realtors are doing a great job for their clients. The other one I want to note was Gary Edick of West USA. Gary we were working with Nathan, his client, and same thing. We had just a challenge with one of finding the right product for his client. I went to 2 other banks. They didn't have the product. Gary gave me a call, and lo and behold, we had the product and we're able to get the loan done for Nathan. So anyway, I just wanted to make those most notables and put it out there. Again, please always remember that referrals are the lifeblood of our business. Without referrals and great people and teams to work with, it would make this world really difficult. So again, if you know anybody that's looking to purchase or refinance, even if they're looking to short sell their home, I refer realtors out all the time where someone's saying, hey, I'm not sure, I can't make my payments anymore. What do I do? I would like to try to short sell instead of foreclose. And I'm able to refer people that I'm working with, people that I trust, people that are certified to do these things, and then get them back on the right track, whether it be through credit repair, helping them get back in to the buying environment, and going from there. Or sometimes a realtor just needs to help them short sell and get them into a rental property just to help recover a little bit. So anyway, have a great 2010. I look forward to working with you, hearing from you, any challenges that you have, any success stories, and would just like to make those things known as we come. Remember, whatever you're thinking about, someone else probably is too. So please share those things. All right, have a great week, and I'll talk to you soon. Bye-bye.